Welcome back to another live session. Traders, hope that you had an enjoyable day and beginning another live session for the last day of trading week on Friday, 19th of September 2025. And this is an exclusive live session from Forex Trading Wizard Academy to find trading opportunity in the market. We have done the previous sessions successfully. Now looking forward to find another session here with multiple trading opportunity potentially. Here the market, we can see in fact currently in a trend, and we see the market in fact showing some movement at the moment that we can potentially take entry as soon as we see that is appearing here. What we can see the market, if you guys look at, you can see this is a lower time frame price action where this is the market where the price is. This is the 15 minutes price action where we can see the price getting a rejection here from the higher price, and from the 5 minutes as well we can see this is a also closing as a bear market. And looking at the lower time frame price action here, this is currently showing that bearish move. From the 4-hour perspective, there is a lot of up and down. Now we can, after the previous 4-hour candle close, the market has just strongly rejected back below here. And from the 30 minutes here, as you can see, the market is potentially forming doji here. This doji is possibly to be a bear market. What we can look for here, guys, is an entry from a very important area of value. We can see the market is showing that potentially here a downtrending market structure. This is what we're looking at for potential entry in that area, in the downtrend. And where if you look at here, you can see in that area the market is showing that the price to be bearish. So what do we see the market? This is the lower time frame, and we might be able to set an entry in that area for this potential movement. But before we look for an entry, let's see what you guys are thinking. Share your thought and opinion. Do you think that gold is going to drop from this level? What I see that here, there is a liquidity sweep from this high, and we might be able to see that potentially an entry here. And that's what I'm looking at for that entry. We see that from the 30 minutes, from the intraday, is the liquidity grab or liquidity sweep, whichever word you want to use. Now 4-hour, this is the market structure. After the daily high to this level, the price has straight drop back. Now first of all, I would like to do a multi-time frame analysis here, starting with the daily, and then we will be looking for that potential setup here, because the way the market structure is forming, we might be able to see a potential entry from an important support level. Now I see that, guys, view has gone well above, but the likes is well below. So if you guys, I know this, we just begin, but if you smash this like button, YouTube algorithm likes it, so it's gonna be helpful to the stream to be visible to more people. So now what we are looking at on the daily low, right? Because it's a bull market. What do we see here in this market? That I'm looking at the first of all 10 EMA and 20 EMA, because they are the dynamic level of support and resistance. This is the daily support level, and here is the support that I'm drawing, and I'm deleting this previous resistance line. So the reason I have drawn that support at 3632 is because it's a dynamic support level, and in that dynamic support, what you guys can see that from here, this is the move, a big drop to that daily 10 EMA, and then creating a higher low from a doji. So with that doji that you can see, this is the daily doji, and very interesting doji, because in both direction it moved almost equal length. More often the market does that. So we can see the market has tested the low to this 10 EM and also tested the high of this previous daily open and close. And if we look at now the overall direction of the trend, we can see that it's a long-term bullish market structure. So there's no doubt about it, because it's creating series of higher high and higher low. And then FOMC, here we saw that there was a significant breakdown due to the FOMC, which is a potentially refreshing or resuming the trend again, because after this big move on the daily creating an all-time high, the market required that correction. So it's the normal rhythm of the market. If you see that a market not correcting, that means there is something wrong with that market. That means there is a false move that you can spot because it corrected. So this is a zone that we can look for potential now entry for bullish side. Now looking at daily, this market lower time frame we can see downtrend, but from the daily it's still a bull market. So I have identified two key level of support. One is here, which is the daily open and close, and also the daily low. Now going to the 4-hour chart here, that we can see this is the intraday 4-hour support, and the market is approaching those levels. So from these areas, as the market approaching you see that from this level it dropped back. Now the best entry would be if the market managed to break to 3632 level, or even we could see a potential rejection from 3644, depending on how lower time frame price is reacting to that level. This is what we need to look at, that higher time frame and the lower time frame. What time frame we are looking at is very important. And if you look at here, you can see this is a trend line, lower time frame from the 4-hour trend line, and from that trend line the market, we see that started to reject back again. And with this 4-hour candlestick pattern formation, if we look at now the 1 hour dropping down to the lower time frame, now we can either look for potential sell for short term for this move, or we can look for buying opportunity, unless first step is to look for that zone. Because if the market going back up to hit the daily high instead coming to the daily low, even we could see a selling opportunity here in this market. That's why if you look at the 1 hour, this is the previous daily, today's high, and this is the daily, the 1 hour doji that we can see. Now some of the levels, if you look at this 1 hour candle here, you can see there's a gap open. This zone is not being tested yet. Looking for an imbalance is very important. This 1 hour resistance, which is, you can see it's a wickless candle on this chart that is showing. If you look at the MT4 here or MT5, you can see there is a gap open potentially, and that the market doesn't like to leave a gap. So it is possible that the market even going up to test that gap and then return. So these are the levels that you will be looking for potential entry once we see that the market is showing up here. So this is the gap level that I would like to mark here. If during the lifetime of this candle, we still have 30 minutes to go, if the market goes back to test that gap, also we will be looking for potential entry, which is still possible. You can see slowly the market is trying to move in that area, in that direction where there is a high liquidity. So that being said, Here is the trend line, and this is a support that you can see in that trend line. And from this support that you can see maintaining that series of high and low, we can see the series of lower high. The market is now going to potentially hit that key. So for us to potentially to sell, if the market reject back above to this daily high, we can look for sell upon break of this high for short term. On the other hand, if we see the market getting the rejection here from this zone, it starts to drop, then we can look for this daily low for potential buy. So these are two levels that I would like to mark here. So this is the daily, this zone is where, so daily resistance, and we will mark it as a sell zone. Okay, now sell zone in a sense that we will not be selling blindly. We would like to see the market is going there in a specific way, and also I will be explaining in detail what we need to look at when the price is there. So these are two criteria that we need to look at. First of all, finding that key level that you want to sell. The next thing is how the market is going to hit those key levels before you look for any sell entry. And if you look at the 4 hour, you can see also this is the level where this is where the market has started to move back below. Now for buying, this is where we are looking for potential buying, and this is the FOMC move. You guys have seen that with the FOMC move the market has created that zone. Now in that area, this is the daily today's low is here. The market bounced to that level. Now it's on in the middle of the daily move. So this is the starting of the daily, like the lower time frame, like lowest point of the daily, tested the 10 EMA, and then the market has gone to that level, to that high, and then the market is moving in this sideway, where if the price deviate from that low from the daily, we could find a very high probability buy opportunity. So you can mark it as daily support, buy zone. Now these are two key levels that we are looking at for today for any entry opportunity. In the middle, if we see any kind of very stronger bearish price action, we can look for sell, but depends on how the market structure is forming. But these two zones that we are looking at the moment is where high probability trade coming in play. And in the meantime, I would like to see that all the members are here. Guys, if you're enjoying, make sure the live session. Hey, I'm by. Okay, it's up. Thank you. Greeting everyone. Thank you very much. Good morning. Good morning. Hello, everyone. Welcome. Welcome. Whenever chart move, EMA will move. There is no signal, sir. That's my opinion. That's completely fine. And having an opinion is the best thing, because that's how you can create your own way of trading. Okay, always have an opinion for yourself, and also look at what others are thinking. Don't take a trade just I'm saying that it's gonna go this way, that way. It's always best idea is to, even if you are having a losing trade, try to take the trade on your own decision, but definitely look at what others are doing, others are thinking. Always take others' analysis and then make your own trading decision. That's how you can do better as a trader, right? And this is the main goal of every trader, isn't it? To become an independent, professional, profitable trader. Do you want to rely on others for lifetime, or you want to be an independent trader? So right now, looking to TP at 3644. 3644. Yeah, this market showing bearish movement. So here so far showing that bearish. You can see this is 15-minute chart. There is a clean crossover of 10 and 20 EMA. The market structure showing bearish, but I'm not entering yet, is because we want to see the market has given a very stronger bearish price action. This is the 30 minutes liquidity gap here, right? So if the price is going to show up a very high confluence entry, then all we are looking into the sell. There's no trend today. It's ranging market. I'm on sell too. There is a trend. Who told you there is no trend? There is trend, right? So you guys can see that here. It's ranging on the little higher time frame. You are right, but in the time frame that we trade, there is a trend. So if you look at the 5 minutes, you can see that there was a move. This is the starting of the daily move, and then created this low, and from there we saw that in this trend move, the market moved to 288 pip, and then dropped to again later 180 pip. Now the market in again potentially to move. Now if we say that, let's say which market you can consider there isn't trend, this is a market that is very bad to trade. So you see that this market 5 minutes range is very tedious. So this market that you can say that there is no trend at all, and very bad market to trade, because here is the whole big range, right? But this one, also this one here, you see, though there is a trend, very narrow trend, and there isn't much movement. If you look at the ATR, you'll understand it. So in this market, the total range from low to the high is only 88 pip. You see, in this market, mostly the range is also 83 pip. But look at today's market here. The range is total 290 pip. So it's a big volatility, and it's good enough for taking 5-to-1 trade, even 6-to-1 trade, if you can enter in the right time. Now still we see that this structure that we can see here, it's a potentially bear market, and the price potentially to break that support level here. Eurusd. Okay, let's create a two screen here for currency as well. I'm looking at here on the okay. Now so looking at lower time frame here, the market is potentially to break that support. While you are looking at currencies, especially euro dollar, we can see there was a significant break below here on euro dollar, which is showing that the market to potentially to trend down, and may come back here to this support level on Euro USD. and you can see there is a head and shoulder, and the market is trending from that head and shoulder, potentially to continue to drop, possibility come back well below here on euro dollar, and maybe coming to that even break this low here on euro USD. So euro dollar is in a sharply downtrend. The market structure, if you look at here, you can see there is a very sharp liquidity grab drop, another liquidity grab drop, and where on gold, you see after the 15 minutes bearish engulfer, the market created a doji, which is possibly to be bearish in that area. And the market structure on gold is here is head and shoulder, and slowly breaking that support, which eventually could lead the price back below here to this daily low. And there is a big fair value gap. This is a massive imbalance in the market on the daily if you look at another lower time frame. So from the 15 minutes, if you look at, you can see this green candle and then imbalance here. So that imbalance, if the market first break below here, we could see the straight drop potentially to this daily support level. And with this bearish price action here on gold, we see the market is showing a downtrending structure. So now there is also another probability here for this market to go ahead and retest this level again, which is less likely, but if it goes back up here, that might bring potentially another entry before this 1 hour candle close. 1 hour candle closing potentially as a, if you look at, you can see it's a bearish doji, and this is a support that potentially to break in that direction. So here what we are looking at, you can see it's trying to push back here. What we are looking at, an unusual bounce to cross this high and then the price to return back again. Welcome back to this live session. Eurusd view. I buy Eurusd. You're buying Eurusd? I don't think so, because it's a highly bear market, depending on what time frame you are using, but I see all time frame it's bear market at the moment, except weekly we see there is a long week, and depending on what strategy, if you are using monthly time frame as a, you know, that like to buy keeping the price below the monthly low, that's a different story. But I don't think the market it's gonna give you that much of movement. So it's a currently bear market, so this is not bullish market, it's a bear market. Trading with the trend is the most profitable trading system one can ever have for bullish view. All right, cool. Now let's see here on the zone on gold. from 30 minutes that we can spot the previous sessions liquidity graph that we can see. That's where looking at the level. The market structure here is bearish that you can see. Whatever GU, euro dollar and GU almost doing the same kind of pattern. Now guys, here how do you look at potential levels that you want to trade? We see the daily resistance that we have found. We already discussed on that. Now what kind of market structure is forming here? Or how do you identify that it's a strongly bull market or weakly bull market, right? Very important. Is it weak or stronger? Because depending on the strength also will be highly influential on your, the strength of the market will have a high influence on your trade. Because if the market is stronger, if you see that there is a higher volume in the market in one direction, you can get a high confluence. So how do you know that? What's the thing that you need to look at to find out that it's a bull market or bear market? This is what a very important aspect that every professional trader look at that. And this is what I always talk about, that be always curious about the market, because when you are curious, then you can see the market from a very different angle. Guys, this is always I emphasize, because trading psychology is 70% of traders' success depend on the trading psychology. And successful traders are those who are curious. Now, look at the market. The difference between the trading and other business is that trading is not like a traditional business. That's why it's opposite in trading, everything almost. So if you look at, if you go to the supermarket, the price drop, then we buy, right? In trading, the price drop, we sell. Opposite, right? It's completely the other way around. In traditionally, you're supposed not to make mistakes, right? You have to be as correct as possible. In trading, you're supposed to make mistake, because if you don't make mistake, then probably your strategy is not correct. Because you can't make a strategy that will never have any kind of drawdown, at least a small percentage. We have strategy, you guys have seen that over 90%, but still there is a little bit of deviation in it, which is the perfection in this imperfection, right? So the universe is imperfect, keep in mind, and finding the perfection in the imperfect is the best way to find something or do something with that. So what you can see that we are talking about, that how do you understand the strength of the market, because the strength will determine that the edge, how much edge you can find in the trade that you are opening. So all the information are here. Candlestick pattern are informed, everything you can understand from their market structure. Either it's a bull market or a bear market, you can understand from the candlestick pattern. Liquidity you can understand, because how the candle formed will determine if there was any liquidity grab or no. And the price action also you can understand from the candlestick pattern. They are fully informed. So trading is not a traditional business. It's kind of sports rather than the business, because here more of winning and losing. when the price is dropping, you need to sell. When the price is going up, you need to buy. So look at the candlestick pattern, and when if it is a sports, then there must be two teams, right? Look at the green and red candle. Now if you want to be win, then you need to stay in the winner's side. Who is winning here? Look at this zone here. And you get that point, right? So getting some reaction from this support level on gold. Now, you see that all those red candles that you can see, huge, large body with a smaller wick. That's the sign that there was a stronger selling pressure. All those bull candle, that few are very narrower than in comparison with the bear candles. So that's the sign that this is a highly bear market, right? And now in that bear market, lower time frame I'm talking about, not on the daily, because time frame is very important. What time frame you are considering when you are making those decisions is the key here. So now as the market is, you can see it's now trying to push back here for another wave of liquidity grab. There is a rejection from this level. So the market is getting some reaction from this level, and it eventually could even bounce back to this daily resistance line. And today there is no any significant high impact news, so the market may bounce slowly back to any of this high, and that's where you can look for the entry. So you can see this is a key support level here in that market. And from that support, what we can expect here, a potential rejection back to the upside to this level where there is a high liquidity. Where what we can expect here for the market to revert here, grab the liquidity, bounce here, and then to return again to the support level. We need to see any of this high, either daily or the intraday, to break before we can look for entry. Now 4 hour is, we have seen the primarily drop here, and in this we have this, before this 4 hour close there is one more hour remaining, and if the market is going to hit that 3655, which is high liquidity zone. We will be entering into the trade with a stop loss well above the daily high. So this is our primary plan for this move, and we could see that the market too have some potentially upside bias here, because this is also aligning with the trend line here. If you look at this trend line, the market was respecting this line here and then here and then here, though you see that this is the FOMC move, and then here. So it's a long touched and then rejected. So now here is the move that you can see the market potentially to bounce back to that level here, and which is high liquidity zone, expecting the market to potentially to reject back again to this support level. All right. Ready for the market to push up before come down. We can see here with this movement from this long wick candle, got that rejection back above, expecting it to slowly come back below here now to fill that zone. We see the price is carrying the rejection from this 20 EMA. We see that significant break below in this market. That was a liquidity trigger, again dropping to the long-term support, coming back. Now we had our early trade that you guys have seen, that from that zone the market this is where it rejected back above and then dropped back down. So currently, as expected, the market has just broken that intraday support. So that is one sign the market to potentially come back to this daily low here. Now going back to the daily level, this is the daily, this is where the market opened on the daily and created this low. It's breaking the daily support level. And this is a fair value gap. And because this is a fair value gap, we potentially could see the market to penetrate that low here. I'm looking at the multi-time frame analysis to see that where the market, after break of this low, is it bouncing off that level. Very high chance the market will have that reaction back above from any of this support level. And looking at the 5-minute chart as well to see the market, how they are rejecting. See, this is the 5-minute candlestick pattern getting a very stronger reaction from this daily opening. So there is a buying pressure here. You can see there is a long wick. So that long wick represents there is a bullish pressure in that area. We might be opening buy. First, we would like to confirm that the market is showing that consistent move in that area. That the market is not feeling that weak. Instead, we could see the market to return again to the direction of the trend or coming back here to this daily low. Now this 5 minutes candle is quite important, because if that one is not being able to break that low, this current 5 minutes, we might be seeing the market is going back up to this resistance line. There is a possibility for a rejection again back above from this zone, because this is a 4-hour low and also the daily support level. Current area of support, unless the market is coming to break that fair value gap, we would see the rejection back above. So I'm ready to enter, but I'm not entering it because it is still can break that support and then continue to drop here until we see that this 5 minutes remaining in that level. Before this, we still have 2 minutes to go for this 5 minutes candle to close. If this 5 minutes candle not being able to break this low here, we will be looking for buy here. If the candle close back below, we'll be waiting for further downside. Potentially in that case, come back to this daily low here. But we will not be selling at the moment, because anytime the market will react to that daily low here. Okay, the market structure is slowly building that momentum, potentially for an upside here. So I'm going to open buy from this level, stop loss keeping below this support level, and we'll be targeting to this nearest resistance line here. So putting stop loss at 3639.69. Take profit target keeping at 3655.67. It's a buy market entry with smaller risk. Okay, so I have opened buy here on gold, which is started to run, showing up some running profit, and would like to see that movement back here. Now expecting a rejection from this daily support, back above. Running profit. Moving up. Ready? We see some move. Very fast forward movement. 29 pip running profit at the moment. And I think we can see some upside further. So I'm holding on to that. And I'll give you a shout out as soon as I will close this trade. We take fast profit, guys, here. This is where running good profit at the moment. Okay. Nearly to 50p profit running, and I'm closing the current position right now. I've secured 50p profit on this. Secured profit, and let me know what you did with this trade on you. What's your update on the trade? And Petra, thank you. All right, let's keep pushing back here. How did that happen? Any feedback in the live chat, guys? If you are enjoying that live session, make sure you like this stream and also share your thought with this trade. We take profit here most of the time. Okay, that's a massive bounce here. One single move. Closed it, done. Retest and buy. TP, yes. Awesome trade, thank you. Still in the trade. Now, do you see the real trading here? This is what I tell you guys, that trading is not difficult. The only thing that you need to make sure that you are always trading with the trend. That's the number one criteria. Trading with the trend is the most profitable trading system one can ever have. So the 4-hour close coming here. Sessions close, sessions opening is very important. Now there is a sharp breakout from this level that we bought, and that was the entry. You can see that where we have entered. Now the criteria was exactly what I have discussed in this live session. This is how the trading is, right? We need to look for a market that is showing that price action confirmation. Now what we see here in that area, that you can see this is a reaction back to the upside, and the criteria was that the 5 minutes candle needs to close passing the previous 5 minutes candle. Now each time the market shows those signs differently. Now it's close to 2000. Thank you. Not selling at the moment because we bought we need to re-look at the market structure now. It might drop from that sell zone, but we will be looking for the new criteria here because there is a rejection here. And if you look at, let me delete all those lines, you can see this is the 1 hour candle, and how this candlestick pattern rearranged is important. And this is what always also I discuss with all of you guys, that now look at the 5 minutes candlestick pattern. This is what we are talking about, that if the candle close past this, before this level, we could see that there is a rejection, and the market has done that exactly, and we have taken the trade, we have secured the profit. Now how you can use that information next time when you are trading in your bedroom alone, right? This is our goal here, is to create traders, because 2025, 2026, 2027 coming up, a time when trading become very important for you, because things kind of getting different. Okay, there might be a lot of opportunity in trading, while you probably there is a lot of change coming in the market. So if you are struggling with anything 9 to 5 or anything that create an obstacle on your financial stability or financial freedom, then this is where the right place to learn, and then to prepare yourself for the next time coming, for the next wave coming in the market, to take it well before. And that is what here more important is, because learning those information by observing takes time, and it takes really a great deal of time. It took me years of time to understand, to observe that why the market should be bouncing off that level. So you can understand it from the behavior of the buyers and sellers, and also what the candles tell, what a story the candle is telling. Because each candlestick pattern has a story to tell you. You see the long wick, right? Pretty big long wick, followed by smaller, narrower candle, followed by bullish impulse. Now this long wick tells you a story. Okay, what a story it is telling you, what that long wick represents. Can anybody tell what this long wick represents? That long wick represents something, represents buying pressure in that area. From where? See the ATR of this candle, also very important to look at. The ATR of this candle is very important. If you look at here, you can see it's almost nearly to 1.5 ATR candle. And in the daily support, okay, buying happen with a long wick rejection passing the previous green candles low. That means there was a buyers here, make this price up, drop down passing that low, and closed passing the previous ones, even opening. These are the information that you need to note down fastest way possible. You can write, this is a 5-minute chart that we are trading. You have very little time to make your trading decision. You guys have seen that we enter this trade 1 minute before this 5 minutes candle close, because you need to wait for that candle either to break below or to close there. And that's why having a strategy means that you practice it over and over again to gain momentum. And that's why more often I tell guys that if you want to take your trading to the next level, You need to take it very seriously and focus on more on learning, becoming an independent trader. And if you want to join trading community, also visit the website here, where also you can directly access all the premium trade that I'm posting. Every trade that I open, I also share in the premium group. And if you want to get access to that, make sure you join the Telegram here for promotions. More often we give promotion to the Telegram channel for joining. And at the same time, you can visit the website if you instantly want to join right now. And I'm sharing with you the Telegram volume for buying pressure. Telegram, this is a free Telegram, but you can access the premium whenever there is a promotion, or you can directly right now join via the website. We have few spots open to take in the mentorship program, where you can access my tool, access my trades with entry, stop loss and take profit, and also you can get all the premium lessons that I have in the website for all of you to learn and to grow as a trader. Now, here is the move on gold already, and is this now potentially going back and continue to rise back to the upside here? So looking at, if you look at here, you can see that this is support. And from this support, rejection. And at the same time, there is a trend line here. If you look at it, you can see it's a big trend line. And where this is support, also there is another trend line here. Come on, that's very interesting. Now, the way the market structures form, as the price is almost to the 4-hour resistance, you guys can see from here, it had that rejection back, and potentially that, depending on how this candle closing, if you look at the daily, if the market is coming here again for breaking below to test that low, this is one possibility. The market again reject back again upside, because it has the buyers has come to that level. Chances that it's gonna try to break this 4-hour high here. 3659 is the 4-hour high, and back to back 3 1-hour candle has got that rejection above. The possibility now for the market to break that 3659 above is very higher. And that is where long wick bullish candle. Now, where we can find our next entry that we are looking for with this one closed. Share you some of your thought. Do you see the market dropping tonight? Good question. We'll be looking at that. Or you are bullish tonight. We already had bullish and ATR equal to average true range. Yes, average true range. This is a indicator that very few people knows. How many of you know about ATR? The real traders are those who knows ATR. ATR is a very vitally important indicator. Do you know the ATR? Do you have an idea about the ATR? Can share what you know about the ATR. So bearish or bullish? We already closed the bullish trade. I am bearish for today because we have middleman and daily time frame. Okay, now middleman is important if it is forming in the direction of the trend. The major direction of the trend here is bullish, so we will be keeping the trend in the first priority. Possibility for bearish anti-annualization volatility. Nope, would like to learn. Okay, all right, so yeah, we will be discussing about more on ATR. ATR is one of the criteria that I use for my trading. A very important criteria if you really want to successfully trade the market. Okay, we will be discussing in depth on that. First, let's look at the bias today. The way this market has rejected back above. Let me delete those levels again to refresh the chart again. Looking at daily, it bounced off this to this daily support, daily level. Well, this market is a bull market. Okay, so and the high probability that the market will continue to trend back to the upside here to this key level of resistance. It's a significantly bullish market, and in that bull market that you can see here, let's draw this channel. Now the market to potentially to create a structure in that direction here on gold, and because it's a bull market, we may see that it's straight again going back up here in that direction, something like this. Okay, so that could be the potential wave, upcoming wave, and upcoming session or upcoming days here. So if that's the situation, we could see the market to continue to trend back above as multiple times it grab liquidity from here. And there's another reason also that the market to potentially to be like that, which is one probability, is if you look at this candle here, you can see it's a FOMC market drop, right? And when you see the event candles, okay, FOMC or NFP, the event candles are important because those event candles is where the market shows directional bias. And this is, if you look at this candle, is a reference candle for low and high. This is also nearly to 1.5 ATR to 2 ATR candle on the 4-hour time frame. If you look at here, the market has extended from that candle below. Now as it is, you see this is a bull flag. The market is breaking out of that. Chances that we could see that the market going up to overextend above this candle. So you'll see that whenever you see bigger ATR candle, pay attention how the market react to that. Let me show you on the lower time frame with that bigger ATR candle how this has done. You see that this doji on the FOMC, we discussed that one as well. Bigger ATR candle, the market you see overextended below from that and then return back again. You'll see that over and over again in the market will move all the time like that. You see bigger ATR move, one single move from here, overextended below little bit and then bounce back to the upside. Look at more examples. Once you can get those ideas, it's gonna be very easy for you to read the market, to understand why the market is doing in the way it is doing. Bigger 8-hour candle after overextension, drop down. Especially when you see the identical candlestick pattern. Bigger 8-hour candle, overextended, bounce back to the upside. So from here, what we see in this current market, in the same way here, especially this kind of 8-hour candle, bigger 8-hour candle, here, overextension, drop back down. Now, same thing, if you look at the 4-hour, bigger 8-hour candle, overextension below, bounce back up to hit that the previous high here. It tells you how much move it does. So average true range, the volatility in a specific period of time. Now the 4-hour candlestick pattern that we can see here, approach that level to that lower time frame resistance. The market is approaching from this support level, pretty sharp move back to the upside here. And with this bullish engulfer that we can see, the market is trending. Here is the high, expecting it to return again back to the upside here. It reached that daily resistance. Now from here, is it coming for another retest or continue to rise back to the upside? Okay, it reached that resistance here. We can see the market has crossed that high from the 4-hour and also the daily. Now this is breaking that high. It is possible for the market to test again here. Now there are two possible scenarios. One is continue to rise back here on the 4-hour close, coming up in 22 minutes. Now before the 4-hour, if the market drop again here to this support before this candle close, we might see after dropping again bullish. So if the market, this current 4-hour candle drop here, breaking that low, we will be entering again buy. So at 3643 level. You can see after crossing that high that we discussed, with the market coming to that 364643 zone before this 4-hour close, breaking this low, we will be looking into the buy again. Have you enjoyed the first trade? Are you looking for another one? We'll be looking to see here. You can see it's getting creating a doji on the lower time frame, and Okay, looking to see if the market is coming to that key support level here. Now looking for another entry. Once the market in this 4-hour drop, if that straight drop back here is a sign that the market will have another bounce back. Less likely to happen, but I think that if it is closing as a very narrow doji, we could see that a straight bounce back to cross this daily high here. Welcome. Thank you for explaining that. Very helpful. Welcome. Which period you use ATR settings? Okay, 14 by default. So basically ATR is by default. And also another very important indicator also I check is Bollinger Band. How many of you are familiar with the Bollinger Band? Very important indicator as well. Even you can trade based on Bollinger Band if you know that how to use it. We will be creating separate lessons on the channel about that one as well. You can see the volatility. You see how big the candles are, which is determining that the market is in a high volatile. I used to trade Bollinger Bands. Yes, Bollinger Bands are very important because it determines that the deviation with the market in relation to the mean value. Along with if you combine with the ATR, that's gonna be huge. Now, from this high here, this is a doji that you can see from here. Big long doji, and the market is approaching that level here and expecting it to come back below to this support level. We have last 15 minutes candle to close here, which is potentially to trend back down to that support level. Okay, so we see that the market reacted to that level as usual, as expected, but depending on now how the 4-hour close coming in 15 minutes will determine potentially the directional bias. Now if it is coming back below here to this support level, which could be, as if you look at, you can see it's a doji here. If it is a reversal pattern, we could see the market coming back here. Now our aim always to enter from the key level of support or resistance. As you can see from here, the market has made its move back to the upside. Now it's coming potentially to retest that level. Now we are not going to sell is because it's gonna be against the trend. We want to trade with the trend, and that's why we open that bought buy. And now with the 4-hour close, depending on how the candle is forming, we'll be able to see either this market to return back again, which or coming back again to this support level. Patience is key, as I mentioned earlier. Always, guys, keep in mind that trading is all about being patient, staying on the edge. Right? So that's the key here, to be patient, waiting for the market to show up. So according to TF indicator here, this is one of my favorite trading tool that I use along with some other tools. And if you guys look at it, you can see some of the trade that it has opened here showing up, which is bullish, and here also bearish. Now those trade, if you take it with proper risk management, okay, you can see that those trade that you can see here, if you take it with proper risk management, how many pip that you can gain based on that. And not all trade will give you profit, right? Here is, you can see this is sell, and exactly from that doji the market has dropped back below. There's another sell here, also with the liquidity here, back to back 3 buy here, and buy here, sell here, buy here, exactly to that liquidity zone. Look at this buy here, okay, now sell here. Look at this one here. How do you use the indicator? Very simple, because this is a strategy. This is not an indicator. It's a strategy that I used to trade and still trade every single day. It's now translated into a Pine script. available for every premium members in the academy. Guys, this is what you need else more than this to find those trade when it is showing up. Now here is what has been considered here. Liquidity, right? We need to look at that point where there is a high liquidity, and finding a liquidity zone is the secret of trading based on TF strategy. There's no past here. We can see the market has bounced off that level. Everything is in the now. So you can see here. Okay, we cannot do past trade. You mean that past? I understand that. The present one, you can see on the 1 hour showing buy. Still the candle not closed, but if you look at it, you can see that it's showing that bullish pressure here. Still the candle not closed. The market, this one will show up the trade when there is a candle closed. Now this one, look at this one here. What we need here is, when we are using the TF indicator, always look for the major direction of the trend to use those trade. Now here is what you can see. Also the bullish engulfer showing up in that area. For those who want to access the indicator, if you are a premium member, you can send your TradingView username to get access to that indicator to the admin. If you are not the premium member watching here, currently it's exclusively available only for the premium members, because there is a lesson behind it, there is education behind it. Now to get access to the TF indicator, that means this is strategy to show you that either to buy or sell. You need the lesson as well as the education. So you can visit the website www.forextradingwizard.com. Here you can find link below this video and explore more about joining. We have few spots currently taking the mentorship where you can get access to all my trade indicator tools, strategies that is showing every single day. So here the market is, if you look at here, you can see it managed to create that bullish impulse back to the upside. And we may see that potential continuation here in this market. As we discussed, it's currently in an uptrend. So what we can see with this double bottom here, this is significant double bottom here, and the market is trending in the major direction here to the upside, just crossed the daily high. Now with this daily high cross of this candle, there are two possible scenario now, as I mentioned earlier, that the market to continue to trend back up or to have another wave of drop for deeper liquidity grab here, depending on, because the price has crossed that daily high here just now, and we can see that crossing that low with a liquidity grab. Creating a double bottom, it's having that upside. EMA rejection from this 10 EMA on gold on the 30 minutes that you can see. The market to potentially trend here to the major direction, but we can see with this double bottom, we can see that movement back to the upside. Crossover of 10 and 20 EMA, the market is trending, and we may see that potentially continuation back up here to the upside to create a new higher high in this market. Maintaining that uptrend here in this market and potentially continue to rise back up with a crossover of 10 and 20 MA from the 1 hour. We can see that it's a bullish engulfer, and the market potentially to trend here to this resistance. This is the 1 hour move that we can see has made to that level, and as it is now trending potentially to revert back again to that the previous resistance line. So here you can see that the market crossed over from 10 and 20 EMA. The price is trading above 10 EMA, which is showing that possibly significantly uptrend here. So to enter any trade later, I will be using the 1 minute price action to break any of the swing low here. There's an order block that you can see with this double bottom. The market has made its move back to the upside, pull back, and you can see that it's in another impulsive move here on this lower time frame. And any breakdown here, break of structure, we will be looking for entry in this market. At the moment, it's on a bullish trend and we don't want to buy from higher high. Instead, we want to see that break of structure. And this is the plan. As upcoming, guys, in the we have an incredible week. You guys have seen. And today also, this session also, we had a big win. Can you write win in the live chat for those who have win today? So too late, yeah. Thank you. Thank you, Anthony. Welcome. Now, can you say win if you have won the first trade that you have opened? Yes, thank you. Welcome. Welcome. Now we trade 1 to 2 trades each session, and that's all we need, right? We need wins, not more trade. Very good. But right, once only. Welcome. We need wins, okay? Keep those profit in your trading account. Don't overtrade, don't FOMO trade. Let your account grow together with us in Forex Trading Wizard Academy. We can trading together. Now, coming up another trading week next week, right? Now, the next week gonna be absolutely special. Can anybody tell me why next week is special? Last week of the month. And I wanna really take the big one, because all those volume came during the FOMC. It's gonna come into correction or continuation depending on. I'll be posting the weekly Forex forecast. Next 2 weeks, absolutely important, because one way it's FOMC first week of October. Secondly, coming up this week, last week of the month. Let's crash these 2 weeks coming up and exceeding all the data from the past weeks. Ready? Thank you. And next week also coming up quite a few giveaway coupon from this live. We had 3 coupons remaining from the FOMC live, which will be also posted on the Telegram. If you guys want to participate there, you can do that. We'll be taking from the Telegram channel. And I would highly encourage you to watch all the content on the channel. That will help you to grow as a trader. And thank you for joining here. It's Friday. I know that you guys have some party. Enjoy your time, and I'll see you very soon. We'll trade together in this live market, winning almost most of the trade with risk management. And that's all. Have a good time. We'll be looking at again very soon in